Let's start with that major reversal we saw on Wall Street. The Dow, the S&P 500, and the Nasdaq selling off into the holiday weekend. The Dow swinging 700 points from high to low. And the Nasdaq now down nearly 12% from its August highs. And yeah, it's just September 2nd. Anxiety on the energy front overwhelming a Goldilocks jobs report. Gazprom reporting the Nord Stream pipeline would stay closed until an engine oil leak is repaired. Natural gas prices dropping by 4%. Despite that news, Tim, you pointed to this as a reason for the swing lower. The charts really show that very clear picture and the direction change right around when that news came out.
Yeah, and previous to that news, Court, great to see you. It was news that the U.S. and Europe and at least Western nations were going to put a cap on what they would pay for Russian oil. Russia quickly responds, and make no mistake, Nord Stream is not closed for repairs. Nord Stream is closed for geopolitical, tactical, counter move. And in terms of markets, look, we digested all week where the EU was in terms of not only gas storage levels. Germany's probably at 85%. There's a lot of people that feel across the EU that their storage levels get them through the winter season. But either way, this type of both hostility and the gamesmanship underscores the problems that Europe has and the problems that really the globe has with energy supply right now. By the way, OPEC meeting next week on Monday, while most people will be sitting by the barbecue. So, with great irony, of course, it's energy that was the only thing that was up this week, which is, of course, where Putin gets his lifeblood from. So I just think, the payroll number was important. I would underscore two things. One is that, yes, we had downward revisions, so the labor numbers were not as strong as they could have been. But most importantly was that this participation rate, almost 800,000 more folks into the job market, bringing up the unemployment rate. And that's actually good news. And the Fed needs more of this. And obviously, targeting labor is something they won't talk about, but it's something that they are.
Grasso, obviously a number of things that we could talk about, but I do want to get your take on what was going on with the news of the Gazprom situation. We know there's an energy crisis already going on in Europe. There does seem to be more worry or more certainty that Europe could go into a recession. Still debate about what happens for us here. So the news that came out today that did certainly change the direction in the market. Is it a worry that will continue beyond the weekend? Or was this just a heightening up of that hostility, as Tim is talking about? How much do you need to factor this into your portfolio decisions out of this long weekend going into the fall?
Well, this is going to be an ongoing, headlines, Court. We've seen these headlines on an ongoing basis, pretty repetitious. So you're going to have to, if you're going to invest, you're going to have to invest around these things. With the market as a whole, these headlines, there are tape reading algos. What do I mean by that? You see that headline go, Tim pointed it out. You saw the market turn pretty close to when that headline was released. The tape goes south. You have tape reading algos that react to it and sell stocks. It's not as a whole, it's not an overwhelming percentage of the overall market, but when you get a market going into a 3-day weekend, it's going to react to that. No different than we had the market react to the jobs number today. Mm-hmm. Tim did a good job of outlining those data points. It was a not hot, not cold, just right type of event. But we've all talked about this, and you were here last week when we were talking about it with Steve Leisman, who got angry at traders, not us, but traders, for not seeing exactly what the Fed was going to be doing. We're not looking for a pivot. What we're looking for is not even a pause. We're looking for a change of pace from the Fed, and I think this number gave a little bit of hope for a change of pace. I do still think they'll go with 75. Because the market gave them 75 and gave them a window to go for it. So with that, I think the market has an ability to move sort of sideways to lower. I think it's definitely a risk-off trade for the next foreseeable, couple of weeks or so.
Courtney, how do you read that jobs report number that we got this morning? Certainly it feels like most of us agree it was somewhat Goldilocks, but what does it mean for what the Fed may or may not do and how they're reading this latest data point?
Yeah, well, the Fed has said over and over again that the strong labor market is one of the things that has been keeping them from being able to stop their aggressive rate hikes. And so we really need to see that come down here. And I think that's exactly what this report has shown, is that we saw a softening of the labor, and it was softened in the best kind of a way, but we're not seeing people getting laid off. We're seeing that more people are coming into the market, and that's why your unemployment levels are rising, which is exactly what you want to see. And that's where it's that cooling, but not cooling too much, which is exactly what you want to see going forward. I think it's not enough that clear the markets didn't end higher today, because this one data point alone isn't going to be enough that the markets are going to go off from here, that the Fed is off to the races. But I do think seeing more and more data points like this is going to be a positive, that hopefully maybe there will be a 50 rather than a 75 basis point increase as we move forward here.
Bonawyn, seeing that participation rate increase up did seem to be encouraging. A lot of people liked some of that trend and that number, even though, of course, it is just one report. We've got a long way to go to see exactly what's going to happen with monetary policy and how it does end up playing out throughout the economy and these different economic reports.
Yeah, I tend to agree with Courtney's point there at the end. So, this one single data point is most certainly positive. But you know what, and it's the Goldilocks scenario that everyone kind of wants to see, and it is showing a glide path towards this very narrow Goldilocks scenario. But what it isn't, and what I think has been forgotten, it is not pain. And the Fed has been very clear that there will be pain in the unemployment market. So this is, us showing that, listen, we can have a tick up in the unemployment rate coming from what is pretty much a robustly positive type of catalyst. But what it isn't is the layoffs. And I don't think the Fed it's certainly not going to pivot. And those that were expecting a pivot, I think that's off the table. I think now we're looking for the consolation prize, which is, okay, the pace of rates. And the reversal in today's market shows you just how delicate that thread is holding on. At first it was a pivot, now perhaps it's the pace, now it's a Goldilocks scenario and one single data point, but we've kind of got to put this entire narrative together, and I think we've yet to do that. And today's reversal, yes, it isn't going into a holiday weekend, and perhaps you don't want to have chips on the table going into geopolitical risk, but it just shows you how quickly sentiment can reverse. And today is a testament to that. So I think that tends to be my focus more than perhaps the labor participation rate. I do think it was a positive read-through, but I would definitely caution against trying to extrapolate this one particular data point and trying to form an entire thesis around that.